Hello, this is Manish Patel with IMTF Trade, and also today alerts trades. We're kind of combining the seasonality with the multiple time frame IMTF indicator today to kind of show you a combination of both and how powerful it is. Here's Carnival here. You go to alerttrades.com. This is free. You just type in CCL and it gives you the 30-day seasonal pattern for the month. So this is from the beginning of the month to the end of the month. Here it tells you CCL has an 80% probability of being bullish, and it tells you it's gonna has the ability to move an average of 8.3%, drawdown 2.7, max profit 11%, and this SIV value, which a lot of people don't pay attention to. This is very critical. This tells you if it's consolidating or not that month, because what good's a seasonal pattern if it's just gonna sit there and go sideways? So this 20% tells you that 20% of the entire price action for CCL occurs this month. That means 1/4 of the price action for the entire year occurs in this month. So you know it's going to trend. The key thing is which way. Seasonality tells you it's 80%. Okay. And the thing is that most people will sit there and trade it blindly. You should not at all. Seasonality needs to be confirmed with technical analysis. The reason why is all seasonality does, it tells you it's a catalyst to do something. Something's going to occur. This is where you have to rely on your technical analysis. So let's go to our technical analysis here. This is basically CCL, and this is in trading view here. You have a chart here. We've gone to the weekly time frame. We teach in our options university and to go to the weekly time frame to predict earnings. And you could see here, we kind of sat there. We had a bearish setup here, got canceled. Then this thing decided to come back down here, start a little trend here, and then come back up here to this point right there. Okay. So you could kind of see it basically went down, trended back down here. It actually got to the previous breakout level here, stopped there, reversed, and then basically came back up here. You have these multiple time frame resistances in the past, and you can see that these levels right there, you can see that critical level right there is floating in midway, but you could see it's very critical there. In fact, let me kind of show you this here. So you could see this multiple time frame support cross right there. Okay, and you could see that level right there, and you could see how well it holds up here. This cross was very close to there, but you could kind of see it as holding as a support here, and then kind of broke that there, and then came down, back down here, and held it again. So if you looked at this on a single time frame perspective, that green line resistance basically was there, but the bleep was this multiple time frame level right there. So you kind of see what happens there, but you could kind of see it pulled back to this level here, held the green line here, which is basically the resistance for the weekly time frame here, and at that point had a high probability to sit there and come down to retest this pivot low. And that's kind of what we looked at in doing this here, is you had earnings coming up, you had the dividend that was pretty much paid out here, really didn't do much, and the following week here it went down. So there was a high probability here from the technical setup, based on what we're seeing here, that it's going to go down. Okay. The key thing is that we could not sit there and enter on this bar right there because we had a multiple time frame support. So the following week we sat there and waited for it to open. When the market opened here, this multiple time frame support was gone, and at that point basically we could sit there and enter. So we entered here. Our stop is going to be these green dots, which are pretty much just above this little bleep here. You can't see it here. Let me actually increase the highlight up. So now you can see the green dots right there. So you can see that was a stop, and then we're targeting this to be a preserve mode. That means basically at this position here, we're going to tighten up our stop, and we could also have the ability to take 50 to 75% of our positions off, which we did take some positions off here. And you could see earnings announcement basically came in, and now it's going down. So our stop is tightened up to a point we have free trades into our account. Even if the rest of our trade positions go against us, we're still going to make money. But you could see just to here, we had a 347% reward risk ratio, which is good, and now this thing's still going and moving downwards. How far will it go? That's the magical question. All the rules in the weekly time frame are true, so now pretty much you go to the monthly time frame, and it will sit there and tell us exactly how far this thing could sit there and go. That way we could sit there and maximize on our reward and figure out what our max reward risk is going to be. And you could see here, now, believe it or not, you have let me make these candles hollow so that you could actually see what's going on with the multiple time frame crosses. So the next multiple time frame cross is right about here. So you know that at least it's going to come here to that level there. So that's a very critical level here. So you have an option to sit there and ride this thing coming all the way down here to 50-60. You could take off your positions there, or you could sit there and try to play into this big consolidation pattern which happened in here with all these support resistances. You kind of get greedy when you start getting into that type of scenario there. So that's something to think about there, but we're looking to play it to at least about right there. So if you go back to our weekly time frame here, this is what it looks like right there. And if we sit there and trade it to there, and we take the positions off, the rest of our positions off, we're going to look at the rest of our positions here to pretty much get very close to 500% return, which is really good, okay, especially for our earnings trade that we put out there about 3 to 4 weeks. And we pretty much put it 3 or 4 weeks out before. Reason why is we got the technical setup, and we also had volatility that was pretty much around average low. That allows us to pretty much buy puts on this thing without worrying about the volatility that much. Yes, this is against the seasonal pattern, but remember, we look at the seasonal patterns as catalyst, something to happen. Everything has to be confirmed with our technical analysis, and that's kind of what happened here. The key thing also is that if you look at here, the seasonal pattern said the max profit you could sit there and go down is 20%, and if you look from here, December 1st was roughly right there. From right there, from this point right here, the opening price to about right there is roughly around 16.48%. And if you look at the seasonality here, it told you the max is 11%. So we're kind of getting to that extreme here, which is kind of what happened in 2008, but on the opposite side. But it's interesting to see. But either way, what we did was we saw that Carnival had a seasonality. We saw that basically it was going to sit there and move. Majority of the movement there was this month, and it was going to at least move 8.3%, which is really good, especially with options. Now you have the ability to get 3-to-1 reward risk ratio. We went to our technical setups and we started looking for a trade. It was not bullish at all. If it was bullish, then this bar right here would have closed above that green line and sat there and tried to break this resistance level at all. When this bar closed there, in the following week it sat there and opened up here. That was a confirmation that from the technical perspective that it wanted to go down. If you guys have any questions, email us at info@eiicapital.com. Thank you. Bye.